Now that we can recognize the three strong bars, the upthrust, the continuation, and the 50% strong bars, let's look at our three weak bars, which are going to be the thrust bar, the continuation bar, and the 50% bar. So let's start off with the thrust bar. As we look here at number 2 on the chart, we see a bar that made a higher high than the previous bar, and it closed down. So this is a thrust bar, and that's a down signal. That's a short signal. It's the reverse of the upthrust. You remember how we said the upthrust was like the rocket coming down and then kicking on the jets, or the upthrust to push price back up? Well, now we're looking at going down in reverse. Okay, we're thrusting in this direction. We're thrusting up. It's an upthrust, and that upthrust should push us down. And we have, again, here at 1, we have a thrust bar. We went up higher than the previous bar's high. We came down and we closed down. That's a down signal. That's a down thrust bar. We have one here. We made a higher high than the previous bar's high, and we closed lower. We had a down close. Okay, that's a thrust up. It's going to push us down. And once again, because we see the thrust bar, now that doesn't mean that price can't go up and it won't go up higher, but what it means is that the odds are tilted in favor of it going down, and you're always going to come out ahead when you're playing the odds. Okay, and here, it doesn't mean price can't go up past here or even come up and test here, but what it means is that the likelihood, the odds are much higher of it going down, continued down. And usually when you see a weak bar, what it means is that price may even test you. You know, because public traders, when we enter the market, the computers will automatically test us to see how strong we are in that position, in our position. But it may even go up and test the high. It may even go up higher and form another thrust. But the key thing to understand is that it's very low probability that the next bar will close higher than this high here after you see this thrust formed. It's very low probability this bar is going to go up and close higher. And usually before it turns, it'll give you a warning that it wants to turn. Once again here, odds are very low that it will close above here, above the high of the thrust bar. Doesn't mean it can't go up. So that's simple enough. We've got the weak bar, the thrust bar down, and we know that it's the opposite of the upthrust bar, which we talked about a little earlier. And so next we'll look at the bearish continuation bar. Now let's talk about our second type of weak bar. And our second type of weak bar is the bearish continuation bar. And the bearish continuation bar will close lower than the prior bar's low. For instance, we have a close here with bar 2 here. They closed lower than the prior bar's low. This is the prior bar's low. This is our close. Our close is lower than the prior bar low. So this is a weak signal. This means that the market is weak. It's a continuation weak signal. Here we did not have a continuation. We look at this bar. This bar did not close below the low of the prior bar. So I'm sorry, did I say this was a weak signal? This is a strong signal. This means that the market wants to try to turn. Not that it's going to try to turn, but it's a signal that if you are short already, you should get out at the close of this bar and wait for a new continuation signal for the short and then hop back in. But to be safe, it signals strength here, and if we're going to stay on the right side of the market, we want to get out. The strength hasn't been confirmed, but it's telling us that the next bar probably won't close below the low of the prior bar, but here it did, and so that tells us we can now get back in here because we have a new continuation down signal. We have a new bearish continuation signal, and we see here at number 2 here we have a lower close than the low of the prior bar. That's a weak signal that the market is weak and that she wants to go down. Same thing, we had another continuation bar here, and then here we did not have a continuation bar, and that tells us that at the close of this bar, since it did not close below the low of the prior bar, if we're short, we want to get out. If we're thinking of going short, we don't want to go short. And so because this is a sign of strength, and now if we want to go short again, we need to see a sign of weakness. We need to see a close below the low of this bar. Now the main thing that we want to consider anytime we're looking for strength or weakness in a bar, or anytime we are analyzing the market, period, okay, we have to understand that the high and the low of the prior bar, they're the first level of support and resistance. The first level of support and resistance is the high and the low of the prior bar. If you can't get a breakout of the high in case of a long, or a breakdown out of the low of the prior bar in case of a short, okay, how can it go down? That's the first level it has to break from. So, but that's enough about the bearish continuation bar. I think you get the idea. And now you probably can guess next that we're going to talk about the bearish 50% bar, which is just the opposite of the bullish 50% bar. But that's what we'll talk about next. Okay, we're ready to discuss our third type of weak bar, which is the bearish 50% bar. And the bearish 50% bar will close 50% below the high. Okay, here look at number 3 here. Okay, this bar closed 50% below the high of the bar, the high 50% of the range, the entire range of the bar. Number 3 closed 50% below the range of the bar. Number 3 up here closed down 50% below the high range of the bar. Okay, these are all down signals. These are all down signals. Now, the difference between the bearish 50% bar and the bullish 50% bar is that you only want to consider really the bearish 50% bar if we're at a resistance level. You only want to consider the 50% bar bearish if we're at a prior top or a prior bottom, which means that we're at a resistance level, because that's a weak bar if it's at a prior top, but that's a strong bar if it's at a prior bottom. And the prior bottoms on this 50% bar, bearish bar, we see here that we have one here and price continued up, and I'll tell you why in a minute. We see one here And this is a spinning top, which is another special kind of bar too, and we'll have to talk about that later. But closed below 50%, and it went up because these are at bottoms. And here's one, this one here, that closed below. So at bottoms, this is a sign of strength. When the bar goes up and closes green, okay, goes up and closes green, but doesn't close above 50% of the range of the bar. Now, the reason for this effect of why it's different at a bottom when it's coming up off of a bottom than if it's turning off of a top. Let's think of our flotation device again, or think about the ball we talk about in the book, The Archimedes Principle. If you're underwater, if you push that ball down, or you push that flotation device down underwater, you have to add strength to it, right? So on the way down, you have to add strength to it. But if you let it go, what happens? If you let the rubber ball, or the flotation device go, it rises up on its own, doesn't it? And that's the principle of buoyancy. And this is why markets are almost the same at tops and bottoms, but there's a slight difference, and these differences can be seen in natural law, and they can be seen in human psychology of how the market works with accumulation and distribution, and it all ties in together. But just remember that on the 50% bearish 50% bar, we only want to consider that bar if it occurs at a top, at a prior top. But if it occurs at a prior bottom, okay, many times it's a long signal, or a signal for market strength. So up here it's weakness, down here is strength. Okay, so that about covers it for our bearish 50% bar. Now you know how to recognize the bearishness or bullishness of that 50% bar.